What's up guys, Raymond here with another financial statement analysis video, and we're going to be continuing on our journey throughout the German industrial stock list. So today we're going to be analyzing a stock called Hapag Lloyd. It's episode 14 of our German industrial stock analysis videos, and without further ado, we're going to start off with the key ratios as we usually do. If you're new to my financial statement analysis videos, what we do in these videos are we analyze the top 3 financial statements relevant to a company, those being the income statement, the balance sheet, and the cash flow statements, and we try to look at the key ratios and the key factors of each statement that make the statements themselves and unique, and we try to come up with an idea of how well the company has done financially in the past up to the current, out to the present day, and how well it will do in the future. So without further ado, let's start with the market cap. The market cap is the overall price of the company, which is divided up as, or comprised of the individual stocks or the individual shares that are available to the public for purchase, multiplied by the price of each share. So that comes up to 60.29 billion euros, which makes the company a very, very large company, which is always good for prospective shareholders. The PE ratio, which is the price to earnings ratio, is the price of each stock, which in this case is 335.03 euros, divided up by the earnings per share, which you can see is 51.53 euros, which comes to a total of 6.66. So an overall idea of the PE ratio is kind of like the overall expensiveness of the company, and you can kind of see each unit of the PE ratio as representing a year of how long it will take for you to have a return of investment. So if you invested, for example, $100 and you wanted to double that, it will take about 6.66 years, given that the current company is growing at the same rate, of course, considering inflation and other factors. It would take about 6.66 years for you to get $100 back, on top of the $100 that you invested as the principal. So the revenue figure, which is the overall sales in the last financial year, was 22.27 billion euros. The dividend yield is 10.2%, which is very, very high actually. It will be very interesting for me to see how long that percentage will continue to last, and how consistent that percentage will be. Not to be pessimistic, but it's just very, very quite large for a company to maintain that dividend yield. But it's definitely, if it's been consistent, I can assure you it's been one of the company's main selling points to attract shareholders, and that's probably why the market cap is so high. The beta level, which just represents the overall risk level of a stock, or the volatility of the price in the last financial year, is 1.07. So that's about 7% higher than the average of 1, which is definitely quite a healthy figure. Let's get into the income statement. So we can see the charts. The light purple figure represents the revenue. The revenue, which you can see in the 2019 and 2020 year was quite consistent, relatively the same, around just under 14 billion euros. And the only difference is the 2019 financial year had a lower profit margin than the 2020 financial year, which is very good. It shows that there's definitely an earnings growth there. I would say the profit margin multiplied by about 4, so a 400% increase in profit margin given the same level of revenue is definitely showing that the company has managed to increase its leverage and increase its output or productivity, which is definitely very good. With regard to the 2021 financial year, the company managed to take making a stratospheric increase in both its revenue and its profit margin. The company looks like a completely different company. So the company managed to almost double its revenue figure to 22.3 billion euros, and it managed to increase its profit margin by a factor of, God knows, maybe about 20. So it's definitely looking very, very good, especially as a ratio between the revenue and the net income. So if it manages to continue this level of productivity into the future consistently, that will definitely make the company a much larger company and a much more attractive company to prospective shareholders. So let's check the balance sheet to check how the company manages its debt as well as its assets. So the light purple figure in this case represents the assets of the company, what the company controls and owns. So as you can see, in the 2021 financial year, it was about 26.7 billion euros that the company owned, and the revenue figure represented about 8.9 billion euros. So as a debt to asset ratio, that's also another key factor that the prospective shareholders as well as current shareholders look for to see if the company is a good company to invest in, and whether or not the company is over leveraged or overstretched. So this company is doing very well with regards to a debt to asset ratio. Usually a company has 50% or more, and in this case the company has way less than 50%. I would say around 30%. So it's definitely doing very well. The reason why having a high debt to asset ratio is quite a turn off for investors is because when you borrow money, you have to pay interest on it. So if you have to pay interest on a large amount of debt compared to relatively similar amount of assets, the company's profit margins or the net income of the company will take a massive hit. So the company will have to pay out a lot of its net income to the the creditors, So that's definitely, they're doing very, very well with regards to managing their debt. Let's check the cash flow statement just to see how well the company manages their cash. So the net income is the starting line. The company is definitely very, very productive, as we've seen. The company managed to generate 9.09 billion euros in net income in the 2021 financial year, and it generated 10.41 billion euros in the cash flow from operating activities. The company managed to spend 1.23 billion euros with regards to investment activities, 1.25 billion euros of which went to capital expenditures, and of course the difference that brought it down was 21 million euros that was spent on that was gained from other investing cash flows. The company managed to spend 2.48 billion euros on cash flow from financing activities. That was 268 million euros spent on cash flow financing items, and 620 million euros paid in dividends to shareholders, and 1.59 billion euros that was spent with regards to retiring debt. So the company managed to eliminate 1.59 billion euros of debt. So the company, as you can see, we're going to check in the past two financial years how it's manages debt. So as you can see, 1.69 billion euros spent eliminating debt. In the 2019 financial year, 1.28 billion euros eliminating debt. So the company is definitely focused on reducing debt to as minimal a figure as they possibly can. So you can see the company definitely values the shareholders' opinion of being over leveraged, and they definitely don't want to be seen as over leveraged to prospective shareholders as well as current shareholders. So that's one of the key things that I think is positive about this company relative to other companies that I've seen. So yeah, that's definitely good. So the net change in cash was 7.04 billion euros in the last financial year, and in 2020 the net change in cash was 169 million euros. 2019 it was negative 145 million euros. So the company's grown from 2019 to 2020 by quite a large amount, and from 2020 to 2021 that was a stratospheric increase with regards to net change in cash. And I believe if the company continues to manage its debt in the way it's currently doing, it's definitely going to attract a lot of shareholders, and the company is going to grow to an even larger size. But I definitely think this is one of the largest net change in cash figures or cash balances I've seen on any company's books, which is definitely positive. So the company should definitely keep that up. And if you guys have enjoyed this video, I hope you guys will visit in the next video and see our future videos. But without further ado, I'm going to close the video. I will see you in the next one. Peace.